On everyone, this is Jordan with Conquer Trading and Investing. This is CTM. Today we're talking about Bitcoin. The bull market is back, and here's where most investors get trapped. A lot of people asking, is it too late to buy? Are we going to see another leg down? What's my plan going forward? We also got, after the bell today, NVIDIA's earnings. We're going to take a look at the regular markets, what's going on with the AI build out, what are expectations ahead, and then to take a look at what sectors are hot right now. Let's get into it. We're going to start off with Bitcoin. A lot of people now see that we are breaking out from the wedge. All bull markets in Bitcoin have started with a wedge breakout. That does not mean that the low cannot be retested. Actually, if you remember what happened during the COVID lockdowns, we saw a major wedge breakout. We saw Bitcoin go from roughly $3,000, $4,000 to $14,000 in 6 months, and then ultimately crashing all the way back down to retest that wedge breakout. Now, price could also, even though we've broken out, we could in a few months ahead, and we're entering a window right now, a window of a lot of uncertainty. We're entering actually a period, the strongest, weakest. How do y'all like that? By the way, if you're new here, welcome. If you're not, welcome back. Look, we are entering right now here as we get towards the end of August, the weakest period heading into midterm elections every 4 years. Now, we do have, after the bell today, NVIDIA's earnings. NVIDIA's earnings are likely going to go ahead and shape the next few weeks. A lot of people are watching what happens in Jackson Hole on Friday with new Fed Chair Walsh to see whether or not he delivers any clues to monetary policy. I do not think he will, personally, being that he's trying to go ahead and take away forward guidance as much as possible. I think he wants the market guessing. I think it would be strange if the Fed were to cut at the upcoming meeting in September ahead of the midterm elections. That might be deemed political, and probably what we're going to be looking at is what the inflation data and how the inflation data comes in September. That's going to be important. Right now, we're seeing crude oil prices come off their recent highs. That's obviously going to put less pressure out there. We know that we know it's on the radar of the current administration as far as them looking to import beef and things like that, bring prices down ahead of the midterm elections. It's all a dog and pony show. Listen, a lot of people were caught off guard about the recent breakout. And that's okay. I want to really do a good job today in helping you gain some perspective about where we are and what lies ahead. A lot of people right now are asking, is this a good time to buy Bitcoin? Am I too late? What do I do? I want to try my best to help you develop a plan so that as this bull market just gets going, or if it does make another leg down, that you're going to be prepared in more ways than one. Oh, I love, by the way, Robert, this is a great lead up into a different session. How can I go ahead and change this, y'all? I want to go ahead and I just changed the font over here this morning on this. I want to go just 1 second. Let's go ahead and change the text color over here. And I'm leaning in because we're about to put in a really good session. And I want to make sure that you all are here for it. Nope, other way around. I don't want that. Oh, I'll figure it out later. All right. So, guys, this is looking at Bitcoin from the top. And when price put in that top October, you've seen since then Bitcoin all of a sudden separate from past cycles, at least at what people believed would be a 4-year cycle. People are looking for Bitcoin to bottom into October. It could still happen, but you have to look at this chart and you have to say, from a few different vantage points, something is different here, right? Now, some people might be triggered by that. Wait a second. You're saying this time is different? No, we're just looking at data. We're data driven. And so far, what's different is the extent of drawdown. You're talking 55% drawdown so far compared to in the past what was at this point closer to a 65% drawdown. That's that on average. That's a major difference. Another difference is ultimately these peaked out at 84, 85% in drawdown or plus. And this one so far, if it were to bottom out at 55, that would be very different. The only other thing that I could point out that is alarmingly different, aside from the separation that we're seeing here right now, which is clear to everyone, is that this is the only Bitcoin cycle that had made a new all-time high before the halving. That was your first clue that something's different. It's still a cycle, but it's not a 4-year cycle down to the day. That's what we want to take a look at over here. I think this is a great chart. This is lining Bitcoin cycles off of the breakout off of the low. And you can see that this is the wedge. You can see the wedge over here I've outlined, the wedge breakout that we're currently undergoing. We did bring everyone's attention to it ahead of time. We did put out the video August 13th saying the breakout is coming. Then as price peaked up over here towards 66, 67, we said, watch what's developing over here. Wait for the confirmation. And since then, we've had the major breakout over here. Now people are wondering, is it too late? Did I miss it? Should I be buying? Or is this nothing more than a liquidity grab setting up? Good time to break out the fractal. You see this over here? This breakout above 83,000. That's a level that I've put in place for you because I said to you, for the confirmation of this breakout, the next confirmation of this breakout to be had, we need to break above it. That brings up the famous NVIDIA 2019 into 2020, Bitcoin 2026, 2025 to 2027, fractal. And you could see so far, and on the NVIDIA chart on the left, if you look at that bear channel that broke down the rejection into the 200-day SMA, you could see that that is what Bitcoin needs to, above 83,000, confirm that this move continues to develop. Now I want to go ahead and just point out something over here as far as where we are right now. And all you could say is, okay, Jordan, I really liked the Bitcoin bear market cycle. And I thought that it was doing a good job in leading up into me being able to buy $30,000, $40,000 Bitcoin. And I realize that why that's still possible that could happen, we don't know what lies ahead. Do you think that today's NVIDIA's earnings could trigger actually heightened volatility into this seasonal pattern that we're entering here during the midterm elections? If that were to happen, what's going to happen to risk? Is Bitcoin going to continue to diverge, or is it going to be caught up in it all? We don't know what lies ahead, obviously. But going ahead and looking at this breakout that's underway, you could say, well, every other time Bitcoin did bottom, Bitcoin so far continues to track very closely off of the cycle low what previous cycles have done. I want to give to you 3 different points to look at. 3 different points to look at. Now, for those of you, and I think this is number 1 and very important, and I just want to start off over here before I get into it. This is lining up these past cycles where price made the all-time high, October 5th, 2025. And looking at it, obviously a lot of people were looking for this pocket over here. And that pocket's deviation could go down all the way towards $30,000, $35,000. And a lot of people, they were just, this is where my eyes were. Maybe I was going to start dollar cost averaging in at $55,000 Bitcoin is cheap. I know that sincerely over here in this pocket below 70,000, we said, well, this is the time. And this seemed to be early. It's back in the beginning of the year. This is where you should begin dollar cost averaging. I know that a lot of people began dollar cost averaging down over here. And let's say that if you had 100% of a bucket you wanted to dollar cost average, they probably got off 10, 15, 20%. So far, they feel underexposed. I want to go ahead and fix that perception for you. because a lot of people are in that situation. Other people are not even exposed. Other people are like, oh, the price seems to be rising. That's catching my attention. Is it too late? Okay. So one thing that I want to highlight for you is that, well, as you all know, I thought the cycle high was here. And this is December 2024, January 2025. But Jordan, price made an all-time high here. Yeah, it did. And $20 billion of Bitcoin spot ETF inflows pushed it up over here. My whole belief is structurally the high was here. And this is from Check on Chain. Check on Chain, he saw the post. He's like, I agree. Structurally, what you're saying, Jordan, is correct. This is where the high was. This high was a result of spot Bitcoin ETF inflows. And if that is correct, and that is the case, then you could see that what happened was Bitcoin actually bottomed over here in February, where we started saying that was a major capitulation. It's time to start dollar cost averaging in. And then you could see, well, Bitcoin made a lower low, Jordan. That's not the low. How could you call that the cycle? It swept the low here. How often do we talk about liquidity sweeps and the dynamic they bring into markets actually trapping traders, right? And again, you saw a lot of these influencers out there online, and they're like, 58,000 Bitcoin, I'm selling Bitcoin, and then going on for the next weeks and months as Bitcoin rose continues. So I'm selling Bitcoin, right? Because they're trapped over here, right? Now, we see price rise strongly out over here. Here's the difference. If this indeed is the structural top, then this was the bottom that many people were expecting into the fall. That puts potentially some people behind. But listen, you're not behind. There's no FOMO here. Do not worry. Even if I am correct in the way that I view the market and what lies ahead, I want you to go ahead and focus on a few different points. First of all, the question is it too late to buy Bitcoin? And other people are saying, listen, take that same plan that you meant to have. During the bear market, a lot of people felt I should be dollar cost averaging Bitcoin. I have until, October. I have until Bitcoin is trading at $40,000 to dollar cost average. Now Bitcoin is suddenly trading almost twice as high at 80,000. Okay. I didn't get to dollar cost average in. But look forward. If this cycle is indeed just beginning, look at 3 different points over here, right? And you could say that, well, where we're at right now is the breakout. It seems to be confirmed, and a lot of people are waiting for that pullback. And guys, this is Bitcoin. A 10, 20% pullback out of nowhere happens all the time, right? Be prepared. Stay in front of it. Is that what you're looking for to begin your dollar cost average? If you don't have a position now and you're expecting that if we were to similarly to have any type of similar trajectory as past bull markets, that would put out a few different points. For example, it would suggest that into December, don't forget, November, December, extremely favorable periods for Bitcoin. A lot of people are talking about we're not in that period now. I just want to remind you of a term I put out called mid-cycle. And if you remember that mid-cycle that I put out, and that was right over here, and it wasn't mid-cycle because we ended not too far thereafter, but mid-cycle over here. Look at the seasonalities over here. This is making a move from 30,000 to new all-time highs at $65,000 in a few months, right? And it's during, right, August. It's during that September volatility. Everyone comes back into October and then ultimately peaking in November. A lot of people think that right now because we're in that mid-cycle, midterm election year cycle, poor seasonalities, that we should indeed be seeing right now a major risk-off move. And that could happen. That could happen if we see, of course, the main trigger that I think would cause it would be if we were to saw any type of hot war return to the Strait of Hormuz, whether or not that was preemptivated by the Iranians ahead of the midterm elections. Whether or not the U.S. thought that the only way that they could get traffic silently flowing at night, dark traffic through the strait on the Oman side, is by going ahead and taking out radar. Who knows what could be the trigger? But something that would send a dramatic price up, especially as worldwide we're seeing strategic reserves for oil at really alarming low levels. That's something that could send that market into that major risk-off move. Could NVIDIA's earnings today, what do they expect it to be, $92 billion? Could that be something that could trigger, even if it's good news, a major sell-off similar to we saw in the beginning of the year, similar to we just saw last month? Of course, anything could trigger it at any time. I want you to put all of that aside. And I want you to focus in on if you felt that you didn't take the opportunity given to you during these past 6, 7, 8 months of Bitcoin coming off an all-time high and trading down just above 55,000 Bitcoin is cheap. I want you to focus only on that and what lies ahead. And there's a difference between thinking, well, Bitcoin just made a major move up and I missed it, compared to, wait a second, over what lies ahead over the next 18 months, I have plenty of opportunity to still put together a plan and make sure that I stick to it and I stay on the right side. I want you to have a few different markers. In December, Bitcoin, $100,000. You're at $80,000 now. You don't know, and I don't know whether or not, as I would expect, that Bitcoin is able over the next several weeks, over the next 6 weeks, to go ahead and break above 83,000, even head towards maybe even $90,000. And again, I've spoke to you earlier in the week, when Bitcoin has that powerful move and you're seeing the RSI and the daily go above 80, usually, more often than not, there's actually an extension of that momentum upwards. And if you were to see that, right, obviously, do you think you should have a position now or be waiting for the dip? There's a lot of liquidity down below, a lot of leverage right around 72,000. I would not be surprised if we came in there and grabbed it. And I think that right now, if you feel under positioned and you're looking ahead and you're looking at 3 points, $100,000 in December. Next summer, right? We have that June, July, that really usually, not this July, but most Julys over the last 10 years, been very favorable. Bitcoin, $150,000. Do you think that you have time to dollar cost average between now and next summer? 1 year of dollar cost averaging. And ultimately, if you look at what happens at Bitcoins as they break out of this wedge, as you break to the new all-time high, that's when you're running out of time. So you can start the wedge over here, and obviously this was a beautiful bull market. A lot of people think that we might have a bull market like 2017 ahead. If things were to align, if we were to continue to see the business cycle as it moves into expansion, and we were able to see the AI era build out continue without any hiccups, smooth leader transitions, if we were to see things like the Clarity Act passed, if we were to see things like a strong move of institutional money into the space, we could have a very similar bull market that we did in 2017. But you don't want to be hoping for that massive move up after the all-time high. You want to be positioned into the next new all-time high. And then you want to be taking profits, scaling out as the new all-time high comes into place. Here's another one over here. Here's the wedge breakout above that 2017 high. You want to be positioned on the breakout, and then you want to go ahead and scale out above. Here's the opportunity, 130,000, 125,000. You're at 80,000 now. Whether or not price continues to climb and how long it takes, and that's all irrelevant. It's getting above that point that you want to be looking to scale out. Right now, you want that same plan of dollar cost averaging in, getting that position on, because if Bitcoin were to come off to 72,000, which would be easy peasy, that gives you an opportunity. If Bitcoin were to come up here for a massive liquidity grab, the only one I could think of that would remind me of, but this came off of an overshoot to the upside. This came off of a massive move to the upside over here. You're talking a 230% gain before global lockdowns and putting it on. But if Bitcoin were to come in, back down, trading back towards 60, or make that lower low so many people expected, you have to view that as an absolute opportunity and gift to maybe even increase the size you're able to put in, right? For some people right now, this needs to make very concentrated, important decisions. I'm going to be very careful about where I'm spending money and why, and make sure that I do my best to, no matter what, continue to DCA in over here. I'm looking at saving. And then as you move in towards that expansion, when everyone all of a sudden will go ahead and we'll evaluate what's going on at the time. I mentioned a bunch of factors right now. I mentioned what's going on with the business cycle, what's going out with the AI build out, what's going on with yields, what's going on with the price of oil, what's going on with legislation. All those factors are going to help determine what happens and how we're looking at the market as we move up there. But today, you have to be able to say, listen, I do feel underexposed. I thought I had more time. I said, well, okay, that's where you are right now. Look ahead. And if you're looking ahead and if you're looking at a few different markers and you're looking at, this is a good checkpoint. As we come into December, November, December, are we trading back above six figures at 100K? If we are, you're going to have to say, well, we're right on time. And then you say, well, I feel a little bit underexposed. And I say, well, I think you have a lot more time. Usually around that time, we enter into a lull. Usually, you have really over the next, I'll say, 6 months, an opportunity to continue to DCA in and get your position on, and then look for that room to the all-time high, that room towards 150K. And now you're breathing in a position of power. You've spent the last year building your position. You're now making a new all-time high, and now you're in control. You get to decide where your exits are, when your exits are, instead of going ahead and saying, now I'm really underexposed and make poor decisions at the wrong time. I explained to you, I think, listen, if you're underexposed right now, I think you still have time. I think you have a lot of time. And I think that you need to be very methodical about creating that position. I explained to you very clearly 3 ways on Monday that I'm trading the bull market. We have the Bitcoin bull runs. It has proven to be phenomenal in not only outperforming buy and hold, but making sure during those massive, massive, massive drawdowns that you're safe and protected. Safe and protected. Bitcoin bull runs right on the breakout back into the market. I told you it's a little different than most people would do, but with that, complementing that on the short side, on the sell side only, I'm looking to go ahead and take sell side positions even throughout this bull market, because I don't know ultimately what transpires. Just because some past cycles off of the low have looked like this doesn't mean that this one will. And I want to make sure, regardless of what happens, that I continue to stay on the right side. We have our spot ETFs for traditional accounts. Absolutely executing off of this. Feel like it's a fantastic way to position. And much like Bitcoin bull runs, it keeps you out when momentum turns over and for lengthy periods of times. Helps you ride the trend. I have GBTC, the grayscale over here. You could go ahead and use IBIT, which is the ticker that I execute off of, simply because there's more volume. And then, of course, we have over here on the V5 Bitcoin. I'm trading this buy side only. This is when momentum is kicking up and the opportunity exists for further gains to go ahead and lean into it. Other people, and I think rightfully so, are using things like buy side boost, buy side boost. By the way, a correction, Phoenix Fire noted that on buy side boost, the architect of buy side boost, that they are 100% in on the Solana trade. So their account off the bottom after it's been a difficult 6 months with the price action, with that major capitulation. And then out of that capitulation into February, some tight ranges to the upside and then, off of the low on the downside. But all of a sudden to go see the full account move up 24%, it feels really, really good. Then we have Don Scholes once a day for people who only want to trade once a day. Also using buy side boost, seeing that even positioning off of the low. It's beautiful. It looks good. It's working well. Those that are trading the buy and sell side, now they're lacking back over here, no doubt. You are seeing only Solana currently in the market. Solana is 1/4 of this account. It doesn't use the same dynamics as buy side boost where you're using that full account. If you did that, the returns would be pretty spectacular on the upside, but the drawdown would be way too much on the downside. It's just not recommended at all. Looking over here at stocks, and by the way, a lot of people are thinking right now that CTAs are max short on the 10-year, that what Besson is trying to do is engineer a squeeze, those shorts, and squeeze them out and into midterms, get a sharp move down here on the 10-year. Watch over here, just watch the line on the chart. If this is to break down over here, we probably see a quick trade for those that are looking for it. Before then, and I would expect ultimately this thing continues to head higher until it pushes further Fed action. Oil, I mentioned to you, was coming off. Let's go ahead and just take a look at it. Off of its weekly high, not too much, right? We were trading towards 90, back over here. Listen, this is something that I deem could be a major market concern if we were to see a spike of oil and a rapid spike continuing up. I was looking for a particular chart and trying to bring it over to you, and that is the sectors, right? We're talking about the sectors, and right now we're trading 53 tickers across different sectors that I believe are going to continue to lead the AI build out, including everything from power and electrician to software, cybersecurity, robotics, space, quantum, nuclear, and of course, memory, semiconductors. Anyone see those new Mac offerings? They look pretty good. I think the next ones after, though, as we get towards the M7, are going to be the ones to go ahead and make the purchase for. Looking to run some very capable local AI. We're going to soon be in that future. Right now, we've seen a massive, this is using what we call CTM 2.x V5 Plus. V5 Plus is universal settings. This is an algorithm designed to have the least potential chance of any type of curve fitting. The algorithm was thrown out there, and then it works across tickers. You could see the magnificent during this drawdown that we've been in of equity markets. We've seen the NASDAQ come off its highs. We've seen the NASDAQ over here recently pull back 3.5% over the last several weeks. And during this period, we are largely across the board on the sidelines waiting for the resumption. And the only thing, remember software was unloved? The only thing now in the market is software, Microsoft considered here. Software for our sectors now. Snow just exiting, right? Palantir in the market. Hood now in the market. And FCK. That's it. It's a very low allocation right now. And that's such an incredible strength to be in over here as we enter this window. If we see price go ahead, maybe the NVIDIA earnings today trigger a market rally, defying seasonalities. Could happen. And if that were to happen, you will see these positions come back into the market. It's been so far an extraordinary display over here, giving people to be money managers, diversification, following that rotation through the sectors. We still have over here our FNGU position continues to be on. and holding. We have the new IBIT position, spot Bitcoin ETFs. Tesla currently getting tagged over here a little bit on unrealized, and I have to enter into the equation soon. Hypernova has been able to put out a template on Apple. I feel like that's a great fit into our V5 stocks. Right now, except for IBIT being long the market, except for FNGU being in the market, we are, and except for Tesla O2 taking a new trade over here, we are currently, everything else, largely on the sidelines. Bitcoin and crypto, all of a sudden, it's been a long time, finally leading stocks. And that's a great place for us to be. Tomorrow, we're going to bring in the copper trade. I want to talk to you about what's going on with copper. I want to talk to you about what's going on with the commodity cycle. And I want to talk to you about what's going on with the current, this is a good chart, maybe right over here to bring on, the current NASDAQ move that we're seeing in what we deem to be the AI build-out era. Everyone, for right now, I think the best thing to do is two things. I think the best thing to do is make sure that you, regardless of what you thought was a 4-year cycle, regardless of who told you what, to follow what's happening with perspective, to realize the same way that you had the opportunity to dollar cost average in over here from below 70 to where we are, you still have that same opportunity. Look at the line above. From that period, we had risen to $83,000 and then dropped that back down below it. That could easily happen again. Yes, you're at the top of the range. I want you to think of that range, though, as not from the bear market, which is obviously the place to be dollar cost averaging in, but until that new all-time high is reached. You have the opportunity, and it's probably going to take roughly 12 months from where we are right now, if we were to see any type of rhyming occur. You have all that time to put on a position so that as price eventually makes a new all-time high, you're now in a position of power and you get to decide what your plan is. We'll help work it out. We'll be there to provide that guidance. It's up to you to use us as a reference point or not. We have a really strong habit of being able to be on the right side at the right time and to bring people really good situational awareness to help them navigate the market. Actually, if you're not subscribed to the channel right now, take a second. Make sure you subscribe. We're live here Monday through Friday. Go ahead and join us. But I don't want the FOMO to be a part of the trade. And I don't want the fear, not of missing out, but the fear of the next leg down happening occur. You've been trained over the last 6 months to see that any type of up moves are sold into making lower lows. A lot of people are very fearful right now, and that could lead them out of the trade. What you're seeing happening right now, although, yes, of course, this move could be, we could see the low of the wedge taken out. That would be unusual. The probability of that happening at this moment seemed to be very low. Look what the wall of the worry that the markets have been able to climb over this past year. It's been pretty significant. If most people told you what would have transpired over the last 6 months, there's no way that you would think that Bitcoin at this moment would be acting as it is. But again, I told you most people are getting this move wrong. Bitcoin is acting as the coming liquidity. It's not acting about the buybacks the Treasury is about to do ahead of the midterm elections. It's not acting about $4 billion of buybacks. And it's acting on the signal that the Treasury is concerned about long-term yields getting higher, that they're going to be there to act aggressively, and the market knows those rates are ultimately going higher. Even if Bessent is able to engineer a political trick ahead of the midterm elections and get yields down temporarily, they're going to be pushed up. The AI build-out costs a massive amount of intensive capital. That capital is competing versus U.S. bonds. It's causing yields on both to rise. Those yields are ultimately going higher. As they go higher, the Treasury and ultimately the Fed are going to have to be there to interact And as they do, Bitcoin already, gold already understands what's coming. That's why you're seeing the breakout occur over here. You can't follow a 4-year cycle. You can't follow a cycle. Yes, everything runs in cycles, but they're not like predestined to the day. You have to follow and read what's going on around you in the macro. If you missed the gigantic major shift in the macro that just took place, you have to reevaluate what you're doing. That's what we're doing here together. That's why we see TM. Yeah. Look, let's think about this question. This is a fantastic exercise. If you I have a question though. Well, like were you waiting? What were you waiting for to begin dollar cost averaging? I would say you were late, right? Yeah, there's always the worry of another pullback. Guys, Nvidia's earnings today could be a trigger one way or the other. If you look, let's go ahead and look at the equity markets really quick here together. Let's go ahead and jump over to here and come down to the daily chart. And so far what we've seen is price make this massive move up, 30%, enormous, right? And then what we've seen happen is price come in for a major scare and then bounce. That's a lower high so far being put in, right? Now you could also say, well, we also have the same breakout, retest, resumption. This is still above the trend line. We're getting close to an inflection point though, and I think we're at it. We have the seasonalities to contend with right now. They're very poor between now and into October. We have Nvidia's earnings could trigger one way or another a breakout or breakdown. No one would be surprised to see the VIX, as it normally does in this window, all of a sudden rise right now. Or it's also as concerning, and it's never easy. This is, guys, there is the largest foreign exchange, IG Markets. The CEO was on TV yesterday, and he's like, when I look at all of the accounts, I see that there are some discretionary traders who go on some significant runs, and they always end the same way. They always end badly. And the systematic traders are the ones that in the long run are able to go ahead and be there to conquer the markets. And that's the thing about discretionary. You don't, if the VIX all of a sudden stays low during this period where it normally spikes, well, then that leads to towards the end of the year, towards November, December, we could see a really surprise market reaction. There's the reason bull markets climb a wall of worry, because there's always a worry to think about. And if you look at the past and you look at the tariff tantrums occurring over here, if you look at over here, the war sphere, right? These were walls of worries, major walls of worries. And that's not going away. So you need to have a plan. I think the best plan is to follow a systematic system that is going to help you know when to be in the market and when out. And regardless of what happens tomorrow, that's going to put you in a place where, okay, I didn't think that this was the market top over here into October, but since October, a couple of tries, but I'm out of the market. And now that the market started teeing off again, I'm back in the market. Like, easy peasy once you decide to stick to it. Now, if I don't have a Bitcoin position, I'm 100% in cash. What do I do? What's the plan? Where are you? I'm worried that we could go lower. Okay, if I'm worried that we could go lower and I'm confident that I want to own Bitcoin, you have to have conviction, right? You have to understand Bitcoin. You have to understand the monetary system. You have to understand the inevitable devaluation of the underlying of fiat, whether that's the euro, whether that's the pound, whether or not it's the dollar, all fiat currency. You have to understand that it is going to continue to devalue, be debased. That's why we call it the debasement trade. I have to say that, well, I believe that tech is going to outperform that. I have to believe that gold is going to outperform that. And I believe that Bitcoin is going to outperform that. So I'm confident I want a Bitcoin position, right? You saw Ray Dalio, cash is trash. He just finally again is like, you should have a Bitcoin position, right? When he saw what Treasury Secretary Bessent had said about what's going to happen here with them coming in to defend long-term yields. If you don't have a position and you don't want to be on zero anymore, you have to, like, realistically, if it were me, I would be saying, well, I really wish I had $60,000 Bitcoin. That's when I should have been dollar cost average in. I don't. Bitcoin could go lower. Bitcoin could go down to 40,000, right? It's at 80,000. If I bought a position here and let's say it was large, let's say you had 100% cash and you bought a 50% position, okay? And Bitcoin comes down and it goes down to, what's your plan on the way down? You have to be continuing to dollar cost average in, right? If you take a 50% position of your cash right now and Bitcoin over the next into the fall, into December, hits 100K, you're going to feel underexposed. That's the whole thing. Like Bitcoin, if it follows the 2015 to 2018 in cycle in green, there's no pullback from here until 100K, the equivalent of. Does that mean that this is going to happen? No. But if it were to happen, like, there's no pullback. So what are you doing? Is 100%, like, do you want the position? Then you can't dollar cost average, your price goes lower, right? So that's the problem. That's the difference also between, look, if you're trading it, you're going 100% in on momentum and 100% out when that fades. That's also a good way to go about it. What I'm trying to get you to do is think about the different ways that you, 100% in cash right now, could begin to take a position. I would think that the safest, that the most conservative way would then take 25% and buy now, right? And then you don't feel bad if Bitcoin actually comes back towards, let's say it came back to 60,000. I'm going to take another 25%. But have these levels like written down so it becomes systematic for you. Because if Bitcoin were to go from 80 to 60,000, the fear is going to be off of the walls, off of the radar. And you might not follow the plan that you had outlaid. What happens if Bitcoin went to 40K from there? Are you just putting another 25% in because now the fear is through the roof? Or is that the plan ahead, that I'm going to go ahead and take the last 50% off? What's the risk of doing something like that? Well, you're 25% exposed. Bitcoin doesn't have a pullback. And all of a sudden, it's then at 100,000 and you only have a 25% position, right? That's the risk on the upside. So it works both ways. And that's the uncertainty and the tension involved. There's no given, there's no defined. 1/4, safe here. I mean, it's better than, I think, being on zero. And if you're worried about the window ahead, it will give you ample opportunity. The one mistake I don't want you to make, though, is if you only take a 25% position and then Bitcoin moves to 100K. And then that same green line, guys, there's really no pullback. I mean, there's a 20% pullback from the high, but if it hit, from here into the next mark of the new all-time high, you can't FOMO. You have to live with and be comfortable with the fact that, you know what? Because it's a mistake to chase. It's a mistake to chase momentum when it's kicking off the high. That's when you see mistakes happen. That's when you see a massive pullback occur, a mean reversion occur, and that's when people make their second mistake. The first mistake was chasing. The second mistake is fear and then selling into the fear, and then all of a sudden you've taken a big loss. That's what you want to protect yourself against. Is it stopping at 1 million? I think Bitcoin's going to 1 million. I don't think it's stopping there. But there are major risks in between. There are major cycles. When I say major cycles, what I mean is, listen, everyone just saw Bitcoin enter into 55% drawdown. If I'm correct in my cycle macro outlook, I get really worried ahead. And it's actually towards the later endings of the AI build out. And I think that there could come a major period of I don't want to talk about it today. We've talked about it before. We'll talk about it again. But yeah. Anyway, everyone, thanks for being here. If you're new here, welcome. If you're not, welcome back. Everyone on your way out today, please go ahead, hit the thumbs up. I'll see you all here tomorrow. We're going to have a lot to break down after NVIDIA's earnings and the market's reaction. Everyone have a beautiful day. A pleasure to be here with all of you. God bless you.